Target just reporting its quarterly results. I want to get straight over to Courtney Reagan, who joins us now with those numbers. Courtney.
Hi, Andrew. Yeah, so Target earnings coming in much stronger than expected, $2.10. Analysts were looking for $1.48. Cost controls and inventory management, though, that's what drove the earnings, though revenues were slightly better than expected at $25.4 billion compared to $25.24 billion. That was the consensus. Total comparable sales fell 4.9%. That is the second straight negative quarter for that metric. Digital sales fell 6%, the fourth straight quarter of declines there. Gross margin did come in line with estimates. Operating margin was above, though, at 5.2%. Target giving a pretty wide fourth quarter earnings guidance range of $1.90 to $2.60 versus $2.22 estimates, forecasting comparable sales to fall mid-single digits compared to a negative 4.7% consensus. On a media call, Chief Growth Officer Christina Hennington said, quote, while discretionary categories remained soft in the third quarter, trends improved markedly from the second quarter, calling out improvement in home, back to school, Stanley drinkware, Target's new Figment kitchenware brand, apparel and accessories. Beauty was strong in stores with and without an Ulta shop-in-shop. Now, Target has become very vocal about theft. As you know, the retailer closed 9 stores because of it in recent weeks, and CFO Michael Fidelki blamed theft for higher shrink during the quarter. There's been a lot of discussion about the number of items being locked up to deter theft and how it inconveniences honest shoppers stuck waiting for store employees to unlock basic items. When I asked CEO Brian Cornell about the negative impact to shoppers, he disagreed and said, quote, actually, what we hear from guests is a big thank you because we are in stock with the brands that they need when they're shopping in our stores. Cornell did not say whether sales had slowed for items stuck in locked cases beyond reiterating customers' quote, positive response to the changes when I had asked him again. Back over to you.
That's a tough one. Yeah. Customers just can't believe we have the stuff that they actually
because we've locked it
are looking for. They actually can come here and buy the things that they want. And they're giving us big kudos for that. It does take locking it all up to keep it there. Does that sound reasonable to you, Courtney?
You know, anecdotally, no. We have seen so much discussion online and other sort of even more Main Street articles about the frustration that shoppers are feeling. And to be fair, not just at Target, but at many other retailers that have felt they needed to resort to lock things up to try to deter or prevent theft. But shoppers are frustrated because it does take a long time. You know, if you're me, maybe you've got a screaming, tired kid in the aisle while you're waiting to get the deodorant unlocked. I'm not sure I'm thinking about how happy I am that they have it in stock. I'm a little more focused on the fact that I have to wait to get it.
You go there to buy things that they have in stock. You wouldn't go if they didn't have it in stock, would you? You'd go somewhere else.
Right. Of course, it is important to have it in stock, but if it's hard to get to, you know, it just adds it up.
I see it everywhere. Walgreens.
Right. It's true.
And weird things are locked up. It's like, whoa, I didn't realize.
Deodorant?
Yes, it's often these things that are hard to trace and easy to resell.
Razor blades for sure.
Yeah,
razor blades for sure.
Yeah, razor blades, baby formula, those have always been high theft items, but obviously I think more and more of these consumable items have been added to the list over the last several years.
Courtney, a lot of the reaction in the stock this morning is positioning. I mean, the stock's just been, the expectations were so low. It's down 60% over the past 2 years, really just one thing after another, even just this year for Target. But when it comes to the guidance, I mean, it's so wide. Also, the comp store sales guidance for fourth quarter is also extremely wide.
You're right.
It almost surprises me to see such a strong reaction as if the worst is definitely over for this retailer.
I totally agree, Melissa. And we did talk to Target executives about that, and they more or less sort of pointed to the uncertainty sort of around the external environment and what's going on with the consumer and how people will react. And this reaction is actually somewhat similar to what we've seen in past earnings reports over the year, where they've done a decent job delivering the quarter, but then that forward-looking guidance is fairly wide, and the street seems to be looking past that and doing so here again because the expectations were so low going in. A couple analysts, I believe it was B of A and Evercore ISI, if I'm getting this right, had put out notes in recent days saying they believe the bad news is sort of baked in, and so anything that Target is able to put forward that looks positive could be a positive catalyst for the stock, which it does look like what is happening here. But I remember this last quarter too, the forward-looking guidance not great. The street looked right past it.
Courtney, when did the comps, when did the comparisons become? I was looking at that. I mean, you're still you still got tough comps from the craziness of the post-pandemic.
We have a chart, if the control room is able to pull it back up, where we have the comparable sales, and you can sort of see this very clear spike up. And the last 2 quarters, we've seen negative comps for Target, and it had been many quarters since we had seen a negative or even a flat comp. So you can see that very obvious spike there from the pandemic, and then the normalization sort of coming down. But then, of course, when you see that negative number, that is something that we had not seen in quite some time, if you go back to about 2016 or so.
Right, but the real big numbers should roll off pretty soon. And then you have positive comps again, because it looks bad when you have comps like that. So
it does. And, in the digital, too, I mean, they've seen a lot of digital growth, and to have negative digital comps now for 4 straight quarters, that's something that we haven't seen. And we actually have not really seen that out of Walmart as we have with Target. So we'll see when that trend starts to turn as well.
We should note that Walmart is up 1% on the back of these results as well.